Welcome to today's update video called Breaking Down Barrier Income. Breaking Down Barrier Income is a monthly series featuring Simplify's Barrier Income ETF, ticker symbol SBAR. SBAR launched in mid-April 2025, just over 15 months ago. Today I'll be reviewing performance and positioning for July 2026. We believe Simplify is transforming the structured note experience by offering a more outcome-based solution and a liquid ETF wrapper. My name is Jeff Shorty, Chief Equity Strategist here at Simplify. Okay, so let's jump right into the review of July's performance and features of SBAR. So this is a slide that highlights the three barrier option income ETFs that we have here at Simplify. SBAR, the feature of the video. Every particular position in the portfolio has a 30% barrier. XV, we target a yield of 15%. And so the barrier level will change as market conditions dictate achieving that particular outcome. And then XXV launched in November of last year. We're using individual stocks to harvest vol premium in the form of income. The total franchise, just over 500 million in assets, about 525 million. Most of that is in SBAR. So if you're a client of Simplify, we appreciate your business. If you're not a client, we encourage you to reach out to any of us here at Simplify to answer any questions for those seeking high equity income. Distribution rate, this is as of June 30th, 2026, 11.75, just under 1% per month. And the SEC yield is 3.23. That's down a little bit from maybe a year ago just because of Fed policy on interest rates. Since inception of the strategy, 13.6% total return with a volatility of 9.8. We've seen several instances of market pullback, for example, in first quarter 2025 with the terror tantrum, and then with the war in Iran causing a bit of a pullback here earlier this year. But things have kind of stabilized. Markets are behaving more rational. We had a little bit of bounce here in late July. But overall, we're very, very happy with the returns that SBAR has been able to generate, just over 13% since inception, and the majority of that is in the form of income, and the volatility about half of what normal equities would offer. So those seeking monthly income, SBAR provides a reasonable solution for those seeking income. So what's the use case for SBAR? Monthly income, an alternative to equities. We've got this embedded 30% barrier strategy where unless one of the barriers breaks, one of the three indices breaks the barrier at expiration, you participate, otherwise you do not. And then for those looking for limited duration or credit risk, SBAR offers a good alternative in that space. We've enhanced the experience with structured notes, with offering continuous liquidity, a lot more operationally efficient. We take care of monitoring all the positions, fully transparent from a pricing distribution perspective. We do videos like we are today, and generally a lower total cost experience than buying structured notes because you get instant diversification around multiple options within the particular strategy. And we enhance the income by twofold. Number one, we do callability. So SBAR, XV are going to have generally a 90-day non-call period. And then XXV will have a 1-month non-call period. And then we're looking at the worst of performing indices, S&P 500, NASDAQ 100, and Russell 2000. Those are the two things that we use to enhance the monthly distribution rate for investors. A new slide within the deck. We looked at since inception for SBAR. A couple things to note here. Typical option premium that we're going to write is around just under 4% at 3.9%. We've had, the fund is about 300 million in assets. It's had over 635 million called at first opportunity, typically 93 days, and 78% of them get called on the first time they're eligible, with the remaining being called shortly after. Now, the environment that we've been in has been fantastic for this type of strategy because every 3 months or 90 days, roughly, you're getting that position call, which allows you to write another contract around 3.9% on average. So we couldn't be happier. We think this is a phenomenal solution for investors looking for monthly income. We've been in a nice upward trending market, which allows for callability. Our products differ from our competitors in the fact that we have more frequent calls, which allows for that option premium stacking to occur. As far as positioning, this is a very similar chart that we've shown in the past. This is at the end of July. We have 32 option contracts. We did have quite a few contracts. A large percentage of the portfolio did get called in the month of July. The distance to barrier is around 27%. 5.1% is eligible to be called, and then we've got the distribution rates. We still are long a put option of about 100% of notional, about 22% out of the money. One of the differentiators for SBAR is that we do this vol hedging with long put options, and that's certainly been effective as we've had these drawdowns earlier this year and a little bit last year. So overall, we're very happy with the positioning of the portfolio. You can see on the x-axis of this chart the notional weighted of each of the contracts, and then the lines represent the three indices: S&P, NASDAQ, Russell. The one that matters is the bottom of the line. That's generally, in most cases, NASDAQ. NASDAQ's had a little more difficult time performing as folks get nervous with the AI trade. And there was a fairly large hedge fund that went under or had a lot of their assets called out in the recent weeks. That's caused some more volatility and drawdowns in NASDAQ. But overall, very consistent profile, diversified basket of options with unique maturity dates. We're very happy with the positioning of the portfolio. When you look at Fed policy, not really too much to report here. Really hasn't been a change in Fed policy for quite some time. Whether they're going to raise rates or lower rates or keep them the same remains to be seen, but really nothing that would drive that SEC yield higher in the near term. From a volatility perspective, we highlighted this last month and continue to see a little bit of drop in the volatility of NASDAQ. NASDAQ kind of had a breakout here more recently where the volatility in NASDAQ became much higher than S&P or Russell 2000. And in fact, small caps have done quite well over the last year, but NASDAQ, given the crowded nature of AI trade, given high multiples, there's been a lot more volatility in the NASDAQ index. As far as correlations, continue to drop a little bit as NASDAQ has been the culprit there, breaking out a little bit more toward the downside than other particular indices, NASDAQ or S&P and Russell 2000. And as far as Emilio still continues to do his magic along with Pat and team, we continue to be very happy with the positioning of SBAR. And as I mentioned before, this is a monthly series. This month is pretty short and sweet, to the point, quick update. Things are working as expected. Volatility seems to be dropping overall in the market, and we continue to implement our strategy. We thank you for your business. If there's any additional questions or needs, please feel free to reach out to us at simplify.us, and more than happy to answer any questions for you. Thank you.